XRP soared for over 40% since my last video where I set it up perfectly for you guys. Now I'm back with insights on where we're headed next and the next trade you need to make. Don't miss out on your chance to catch the next 40% move. All right, so super quick recap. In my last XRP video on February 2nd, I said we'll look for a three-way move down into support to look to get behind to target for higher, and that would be for that juicy C3 trade, and we did just that. As you can see, we came down in overlapping chop, which implies the price action is corrective. We tested our support perfectly before pumping 40%. We did, however, get a nasty rejection right on the channel boundary. So where does that leave us? I actually think this is a great example for sticking to your plan and some risk management. So we'll dive into both of those things next. So zooming in here a little bit and cleaning up the chart, it shows that we did not have a super clean three-wave move in here. We did have a series of overlapping chop, which again implies corrective. But when it comes to sticking to your plan and using your risk management, this is what I'm talking about when we have an area that we know we want to get long. And I'm a big proponent of not moving our stops and sticking to the original trade plan and letting the trade play out, because there's so many times where myself or people I know or members have gotten a great entry. Say we got this entry right here at that 35 cents. They move their stop up to break even or in profit because they think that this move is going to be the next one that runs, and then it comes back down and wicks them out only to then run in the direction of your trade. And Mark Douglas talks about this in Trading in the Zone and a couple of his seminars. But when you do something like this, you're actually increasing your risk and lowering your risk reward overall, because what you're doing by moving your stop into break even or into profit early is you are not accepting the initial risk that you open the trade with. So your whole trade plan goes out the window once you move that stop. For the most part, I can't tell you how many countless times it's happened to me. It's happened to really good traders that I know. It happens to members. What you want to do to keep your risk reward and your trading strategy all consistent is let the trade play out how it is. If you're nervous about taking a full stop, then I recommend sizing your trades down until you get more comfortable with this, because right now, if you're trying to over manage your trades like this and you don't have all day to sit in front of it, you're going to end up getting stopped on a wick like this, and you're not going to be able to catch this trade. So now let's talk about managing the trade the right way, because you definitely want to start managing it after a crazy move like this. So as you can see here, this is my count that I'm following, and this is how I'm managing my trade. There's nothing that says that this still can't be a fourth. It is a very deep and sharp fourth, but there's nothing in the rules that says a fourth wave can't go beyond the 618. What it does say is we can't overlap the wave one high. Otherwise, this is not a 3. It can be a expanding diag for C, but is definitely not a 3 wave for this whole move. I posted this in the Discord. This is how I would be trading this, and this is how I am. I did not take any profit up here, unfortunately, but I have the invalidation at this level. It is likely that this is either still going to be that fifth wave, or this could have been some form of expansion and we're getting down lower. When it comes to management, a little below the invalidation level is a great spot to put your stop loss. Now, where it's a little complex is we don't know if this was an expansion and this is a wave one high or this one. So I'm doing it manually. I'll see what the price action is down here. Ultimately, I do not want to see it break back into this base channel, but I don't see anything wrong here with this super deep 4 as of yet. It did exactly what we expected it to do, test the base channel, and now it's moving up a little higher. What we do know is this series of measured moves is working and the algos are behind us. You see the reaction here, Profit take here, same for these ones. You see the profit taking along the algo targets. So we know that these algos are in play and this series has not broken. So we look for that next series. And that next series target is all the way up at 52 cents, which is 20 something percent from here. So that is the next trade we're looking for. If it does come down and invalidate, we'll exit our position and look to reassess what this might be, because like I mentioned earlier, this could be some form of expansion. So I'm still looking for this to move up in this area, that 52 cent level. Maybe even higher, and test this channel right here. If we do start moving up in what looks to be a 5 waves, then I will start trailing my stop a little higher into profit, but I am looking for that move to get higher. I know there are a lot of you following this, so make sure to subscribe because I'll be updating here. If not, on my Twitter, you'll see that link right here. So that's it for this one, guys. Hopefully I didn't go off on too much of a tangent about risk management and managing the trades and sticking to the trade plan, but I think it's super important to do so because that's the only way you will find success, is being consistent. But if you want to learn more about building your trading strategy and remaining consistent, or even about measured moves or Elliott wave, I welcome you to join our site and start putting together your winning strategy before the next bull market. I'll see you next time.